Hey, what's up, guys? Today we took a long position on MNQ, ended up break even. However, our system did grab the trend correct, which is ultimately what we're looking for, and then simply seeking an entry model. So I'm going to get into that, how we found the bullish trend, what we saw, and then, of course, why we took a later setup than what we should have. There was a valid one right here. I'm going to get into that right now. So first things first, liquidity grab, right? That happened right here at 9:36, London low sweep, and we immediately inversed a bearish fair value gap. So does that make me bullish? Not quite. Does that make me bearish? Definitely no. We're just waiting for more context at this point. I don't take the first setup. I use it as a reference to find short-term direction. So for example, what I mean is that after the London sweep, if we inverse a gap, usually it's telling about short-term direction, but we need confirmation. So this is what happened. We swept the gap, we swept the liquidity, London low, had a little bit of expansion, not much, retrace, kind of chopped around, and then finally, right here, boom. This leg is respecting the inversion and making this a valid setup. So for me, I'm now seeking an entry model because we don't trade the first inversion. We look for the second or the third, depending on price action, right? Now, it wasn't A plus today because the perfect scenario would have been that after the inversion like this, we get a small pullback and then expansion like this. Instead, we got all this back and forth chop, right? So although we got expansion to the upside, through some choppy price, you can't deny that this is bullish. This is definitely not bearish. So that's why we don't look for shorts during price action like this. We only look for longs to join the prevailing trend. Now, this gap right here was a gap we should have traded, but I'm going to explain why I didn't. And I'm going to explain how fear and greed can enter our psychology, or our mind, I should say, and mess with our psychology. So this gap, I was looking at it and I thought, well, this would be a perfect entry, but I'm not going to take it because simply I don't like how price action is looking. So I'm actually happy about the decision. It's just unfortunate to see that this was a perfect 2-to-1 setup and it played out. Okay, it is what it is. We move on. We don't let this affect our next trade. So liquidity grab, check. Established trend, we held up, check, but I'm going to show you we had some chop, not the best price action. And then finally right here, boom, expansion, pullback, more expansion, small pullback, more expansion. Like, this is an established trend. Is it A plus? No, but you also can't say that this is bearish. So the trend is bullish. After the step 1 and step 2, now we're just seeking an entry model, step 3. I want to point something out here, guys. We had a 1 minute fair value gap here that became an inversion fair value gap right here at 10:35. Why did we not go long here? Okay, simply because New York has a tendency to give you a theme of the day, or at least the short-term theme, simply based off of the open. What do I mean? What I mean is, if you notice here, I'm referencing all these aggressive pullbacks that we were having. Okay, so when price opens with aggressive pullbacks, it generally still has them for a while. The opposite's true. When price opens with beautiful directional displacement, it generally tends to stay strong in that direction. So what I'm saying is that because we had 1, 2, 3, 4, a bunch of these aggressive pullbacks, I didn't trust this inversion. I thought I would prefer to see a pullback like this, just like we had here, and enter a gap near the pullback, just like this setup. Sure enough, the market was kind to us, respected our theory, gave us a nice pullback, and then I entered right here. This was our fair value gap that I used that turned into an inversion fair value gap. Damn, it looks like price is going to head to our TP, which is unfortunate because we got break even. But anyway, we got the inversion. I marketed in right here early because price did look explosive, and we got well in the money immediately. Now, I'm going to judge myself on one thing that I messed up. This was our break-even level. Usually what we need is a closure above it to set stops break even. But I really feel that this price action got into my mind instilled a little bit of fear in me, which is why I did not trade this one, to be extra conservative. And then I was also extra conservative with my break even. I set my break even upon the tap of this level. Had I waited for a closure above, I would have not hit break even yet, and we would still have a chance to potentially hit our TP. Now at this point, this candle right here, 1148, now we'd be break even, and it would make more sense. But it is what it is. We're human. We all have mistakes, and yeah, today I would say it was price action that didn't help my mindset. I need to be a little bit more strict and just remember these small things like break even when we get a closure above, not just a tap. But anyway, that's the same model that we always trade every day. If you have any questions or need more clarity on it, watch the previous reviews because we have the same 3-step process on every trade. And yeah, I'm also on X, on Discord and YouTube if you guys want to comment there. Peace out, guys. Have a great day.